Hello, friends. Welcome to the Weekend Investing Daily Bytes. Today is 19th of April, and after many days of small cap stocks gaining ground, we finally seem to have hit some resistance. The Nifty that has been falling for the last 2 days continued to do so, and primarily led by IT stocks again. So, IT stocks that had dropped dramatically on Monday. Yesterday there was a sort of a reaction day where pent up demand at that level got absorbed, and now the selling started again. So it may be a while before we come to know what is the real bottom on these stocks. The IT index is precariously at the edge of that support that I showed you day before yesterday. Many sectors were down today. There was hardly anything up today except metals, and we had a nice beating in the IT space, as I said. So IT down 1.8% for the day. Uh, PSU banks down 0.8%. So this yesterday's rumor about capital gains tax review, which was vehemently denied by Finance Ministry, then later on again denied by IT department. Um, some people still feel that there cannot be any smoke without fire, and something is brewing, but it is being denied right now. So you never know over the course of the period, because this time when the budget comes around in 2024, it will be a few months before the elections, general elections, and that will only be a vote on account budget. So no big decisions will be taken in that budget. But as we have seen in the past, like we had the corporate tax cut couple of years back in September, there can be a mid-year change in IT rates or IT policies also. It need not just be on the budget. So people are cautious about this. Governments all over the world are looking for more tax as they continue on this path of having huge deficits and not really coming anytime anywhere close to wrapping up the subsidies that they doled out during COVID. That is still continuing. So for instance, the food subsidy on you know food being given to grains being given to 80 crore people, that continues. So many of these things have a drag on the overall budget, and governments are in a fix how to raise money for that, and taxation is the easiest way. So whoever is in the tax net, screw them harder is sort of the way to go for the governments. Anyhow, coming back to the topic for today, we basically had a very dull day, but not a disastrous day. We are coming off a rally of 6, 7, 8 days, and we have now stopped for the last couple of days, so nothing really alarming as such so far. Like you can see on this chart, Nifty went up from around 16,800 levels to about 17,800, 7,900 levels. So very nice 1,000 point jump. And now it has given back about 250 points from the top. Right here, still maintaining above this trend line, still not really broken down yet. So I think the next few sessions will be crucial as to either we break down here or we start to pick up the momentum. And once we do go beyond 17,800, I think if this hurdle gets taken care of, the next one, I think we will go for the all-time high. That is my gut feel based on this formation, that either we will go right to the top, or if the FI is selling and overseas cues and this fear about another hike in the next Fed meet gets stronger, then of course we have more downside here. Mid caps are not showing any sign of any major weakness after this huge rally. Just one session of a very minor down tick. Small caps also, although it was not a higher closing like in the 11 sessions previous to this, but still very, very robust. Nifty Bank also playing around very marginally around that 42,000, 42,100 mark. So very strong chart still on Nifty Bank. The only weakness I see in that developed in today's market was a slight increase in the dollar index. And whenever the dollar index is coming off a very important support, 101 is the support that we are looking to break actually. But because it was coming off it, there was a sudden sort of fall in gold prices also, and that will impact some emerging market flows also. TVS Motor remained the stock of the day for me as it tried to make a new high. It did make an intraday new high, but it closed just below the previous high of October. So very, very strong chart setup. One should look for trading setups because this looks like it is going much, much higher. That's the stock of the day. So the topic that we want to discuss today is the gold's 8-year cycle. So this is very, very interesting. Uh, of course, I am no cycle theory expert. There are a lot of Gyanis out there who will give you a lot of detailed view about cycles, Elliott wave theories, etc. So I am just going to give you a very cursory view about gold's 8-year cycle. So this is the US dollar gold chart, and the gold chart over the last 50 odd years is very repetitive in terms of a 8-year cycle. So every 8 years, give or take, 6 to 9 months before or after, gold makes a significant bottom, and then it goes into the next 8-year cycle. So, for instance, a significant bottom was here somewhere in 76, 77. Then gold rallied some 8 times from there, and another significant bottom was in 84, 85. And then it went up again from 300 to 500 and came back again, some significant bottom here. Then the next rally from 93 to about nearly 99, 2000, significant bottom here. Then, of course, we see the massive run. Because, see, this period was the period where gold, the Nixon took off the gold standard, the US dollar backing of the gold. So gold went up dramatically from 1971 at about $35 an ounce to about $800 an ounce. That is a kind of run up, 20x type of run up it saw there. And post that, there was a very long bear market in gold because, one, of course, to digest this 20x gain coming in less than maybe 5 6 years, and two, central banks were selling here. So UK sold off all their gold, Canada sold off most of their gold, several other countries sold off their gold, and it was all publicly declared, and hence and it was allotted that and we will sell so much gold in the next quarter, so much gold in the next quarter. So the market was totally dull for almost the entire decade. But once that selling got over, gold took off again because of the supply getting taken off from the market. And in the next about 8 years, it went from close to 250 to about 950, and made a significant bottom here somewhere around 750. In the next cycle after this, it went from around 750 to about 1900, and then came back to the bottom of this next cycle at around 1050. And from 1050 it went to nearly 2000 in the current cycle. And this bottom that it has made in September 22 is, according to me and according to a lot of other gold watchers also, uh, the 8-year cycle low on gold. So, and as I said, the 8-year cycle low could come a year or 6 months before or after. That precise time is there. It is not an exact science, but that's what it looks like. So, if this were to be true for the next 8-year cycle. And each cycle you can see is very different. So there is something called the left translated cycle and the right translated cycle, or an even cycle. So an 8-year period, you may have most of the gains in the first half of the cycle, like in this one, like in this one. In some of the periods, you may have the gains coming more in the second half of the cycle, like probably in this cycle, like also probably in this cycle, where the first half till about 20 was not so much, and then maybe it was more of equal here. uh, then maybe this cycle was more even, and this cycle probably was the only cycle where the next bottom was lower than the previous bottom. So very very interesting cycles, and if this cycle theory is reapplied for the next 8 years, then what we are saying is that till 2029, 2030, there is a upcycle that is available in gold. Whether it will be first 2 to 4 years is very strong upcycle, and then a downward part of the cycle, or will it be not so great in the first 2 3 4 years, but then a huge upcycle will happen. But nevertheless, from cycle start to from cycle bottom to cycle bottom, what has been the trends that we will see in the calculation that we will show you. Also, I have plotted gold in INR also alongside. So the blue line is the gold in US dollar terms, and the orange line is gold in INR terms. And we will see how this pattern has played over these last 7 cycles. So if we see this data of 8-year cycles, very very interesting data. And what we can see is that the first cycle we saw there was August 76. It started at near 103 US dollars. Indian chart is 34 rupees to a gram, and this one was $103 to an ounce. Uh, by the end of that cycle, USD, the price jumped to 682. From 34, it jumped to 203. So it was a 177% gain on USD and 296% gain on INR. In the next cycle, the gains were only 14% in USD, but 164% in INR. In the cycle of 85 to 93 to 2001, you had a loss of 21% in USD, but a gain of 21% in INR. In the cycle of March 2001 to September 2008, you had a gain of 180% in USD and 195% in INR. And in 2008 to 2015 cycle, you had a gain of 45% and 96%. 15 to 22, you had 57% and 93%. And this current cycle that has started from September 22, we are up about 20% in both of these currencies. So the average cycle gains over about approximately 8-year period has been about 67% in dollar terms and 126% in INR terms. So if this average cycle gain has to materialize over this cycle, going from September 22 to let's say September 2030, then the price from currently at 5,000 rupees a gram would jump to approximately uh, 12,000 rupees, or maybe somewhere close to 11,000 rupees per gram, or 110,000 per 10 grams, if you want to see the context. So that's how the gains will come. The average CAGR will likely remain in the period in the region of maybe double digit, going from 11 to 13% is what is expected. But of late, it has been much, much more than that. So, what I'm trying to say is that this current cycle has started. And if you are a reasonably long term holder, you are in the sweet spot of this cycle going up. and the likelihood that, if you are getting in here and you are not making reasonable gains by the end of the cycle, or even by the mid of the cycle, if it's a left translated cycle, is very, very low. So from that perspective, it's a great, I think, time to enter gold. Of course, at the height of, and an all-time high will unnerve a lot of people. I think we are somewhere close to this region when it comes to where we are in terms of the larger scheme of things, where this bottom has been made, and we are now looking for a rally of this kind to happen in the next few years. So, this is all I have for today's session. Thank you so much for watching this. Once again, I've run out of time today, so not much time to take questions today, but definitely we'll do that in the next one. Thanks. Bye.